Hello everyone, this is Forex BB. Welcome once again to our channel. Today I'm going to explain to you why you should not take a trade every time or every day. But before we proceed, please help us by subscribing to our channel, by hitting that button below. That will be very helpful to us, especially to me. Okay, let us jump to the business reason behind like why you shouldn't take trade every day or every time as follows, guys. The way this forex market operates involves some aspects like accumulation and distribution, also reaccumulation and redistribution. These two aspects makes us traders difficult to take trade. I mean, winning trade, especially winning trade every single time or every day. By understanding these two aspects, you'll be able to determine on your own which time will be the best time for you to trade and have highest percentage to take a winning trade than the losing one. So you have to consider these two aspects before even deciding on your plan. I mean, trading plan. You should involve it in your trading plan or in your daily routine, especially while you are trading or you are taking analysis. Let me explain these two aspects step by step. Let us start by accumulation. Accumulation, this is a process where the market collects some volumes of liquidity that will help it to push further, maybe to go up or to go down in a long run. So in order to accumulate this liquidity, the market operates different tactics or tricks so as to trick traders. The first thing is manipulation. They manipulate traders to take trades which are against the trend, or to take trades that they will probably take their stop loss easier and involve those stop losses in the liquidity. Also, they induce traders. They do something like inducement. They act like they are going down maybe, but all of a sudden the market changes the direction and it starts to move upward or going up. So that's through inducement and manipulation, that's how the market accumulates its liquidity. It is impossible for the market to move from one place to another without enough liquidity, especially when the market needs to move in a very long way. Let's say like about 500 pips or 1000 pips. So it needs to collect some sort of liquidity before starting this movement. Most of these accumulations takes place on the start of the day, week, month, and even a year. So it takes place at the beginning of each month, beginning of each year, beginning of each day or each week. Let me explain on how it takes place at the beginning of the day. In each day, there are three main sessions, which the first one will be the first one is Asian session, London session, and the last one is New York session. So at the Asian session, this is a session where the market accumulates some sort of this liquidity that will help it to make movement within a day. So a lot of manipulations and other inducement happens in this session. Though at the beginning of even London session, there are some inducement and manipulation, the same way to get enough liquidity to cover the whole day movement, guys. Or they say average range. I mean the average range of the day, especially for a certain pair. Talking about the start of the week, especially on Monday, the market is acting in a way like it is moving in a sideways. it doesn't have a really good movement on these days, especially Monday, because the market is about to take enough liquidity by doing manipulation and inducement to help it to cover the whole movement of the week. I mean, from Monday to Friday. So Monday is the day take care, because a lot of manipulation and inducement, are taking place there, so as to grab enough liquidity for the whole week. If you are going through your charts, I mean, like you are going back, I mean, previous days, you will notice, like on Monday, the movement is very small compared to the movement on take place in Tuesday, Wednesday, and other days of the week. It is because of that reason, because the market is about to accumulate enough liquidity to cover the movement that will happen in the whole week, guys. The same applies to the start of the beginning of the month. The first week of the month, the market is about to accumulate enough liquidity that will help it to move the whole month. Though this is not, 100% thing that is conducted by the market. The market is not, it's not guaranteed. The movement of the market is not guaranteed, but mostly these accumulations take place at this beginning of the year, beginning of the month, beginning of the week, and as well as beginning of the day. So the first week of a month, it is a good time for the market to accumulate enough liquidity. Then it will help it to push further to cover the whole movement of the month. The same applies to the start of the week, of the year. The first month of the year, sometimes it's hard to determine the movement of the market, and a lot of these, most of time on January, the market is moving on sideways, so that makes it hard for a trader to capture a good long movement. Though this is not 100% always, but mostly it happens. On January, the movement is upward. You can't even find a good setup that will move in such a way to get many pips as possible. This is all about accumulation. Okay, let me explain and how distribution works. If I was a smart money trader, I could define this distribution. This is the point where these smart people or market makers are taking their profit from the market. They place their orders after the end of accumulation phase. Then after the movement and after they made a reasonable profit, then they take the profit away from the market. So this phase is known as distribution phase, and this is normal, occurs or happens at the end of the day, end of the week, end of the month, and end of the year. If you take a look to the previous chart, you will notice something like on every Friday, the market is starting to move in sideways, or sometimes 5 p.m. of the day, you will see like the market is moving in sideways at each end of the day. Not every day, but most of days the market start moving in sideways, especially when it is 5 p.m. or 6 p.m. Also in a week, every Friday, you will not see the market is starting moving in sideways, because people, especially these smart money smart people or market makers are taking their orders away from the market. Like they are taking profits. So the market lacks enough liquidity to proceed, moving in straight line, let's say, or like moving in impact form. So it start moving sideways. This implies like the market is lacking enough liquidity to keep going. Even in the end of the year, especially in December, a lot of traders do not take their trades in December because the volume of liquidity is very low, because the market lack enough liquidity to keep going. As these smart people or a lot of traders, they are taking profit out of the market. So this leading to the low volume of deals in the market, as well as the volume of liquidity in the market. That's all about distribution, guys. Then what about redistribution and the reaccumulation? Starting with reaccumulation, this happens when the market started the move after accumulation. Then let's say at the mid of the day, or mid of the week, or mid of the month, the market lack enough liquidity to proceed with the same move as it is started after accumulation. So the market start to move in sideways, though it is at the mid of the week, or mid of the day, or mid of the year. It starts to move in sideways so as to grab other liquidity that will act as fuel to keep going and move towards the intended number of pips. So reaccumulation happens at the mid of the day, or mid of the year, or mid of the month, as well as mid of the day. Oh, I don't know if I have repeated again. So this is like doing accumulation once again, but it is at the mid of the specific period of time, let's say year, day, or month. So they take extra liquidity that will help the market to push further. That's all about reaccumulation. On redistribution, this happens when the redistribution has happened, but some traders or these market makers are still there on the market. They didn't even close their positions, so they wait until a certain period of time, or until the market hit their target, because these traders differ in the ways they plan on their targets. So once the first distribution, the lead distribution takes place, these traders still hold their trades until a specific period of time, and then they do the distribution by cutting their trade and taking their profit. So this is an act that is happening after the lead distribution. So they do, after the lead distribution, so they do lead distribution since they have already had some trades running the market. So they are cutting those trades or taking profit, while other or major or the majority has already took their profit in the market. After understanding this concept, personally, I changed my whole way of trading, and it helped me to determine a lot of stuff, like when should I risk much, and when should I risk just a little bit in the market. Sometimes I even go full margin in the market, because once the market shows like this is a real time, the market is on the real move, not accumulation, not distribution, or either not distribution or accumulation. So I just go full margin so as to get a reasonable profit from the market. The same applies to you. You can use these concepts not as a real strategy for your trading, but as just a aspect or just a hint that will help you to modify your way of trading so as to cut some losses, some unwanted loss. You know, there are some unwanted or unnecessary losing, you know, in the market. So just apply it to your way so as you can achieve some fruits from the market. Thanks for listening, guys. Thanks for your time. Don't forget to once again to subscribe to our channel. That is very helpful thing to my channel. Please don't forget to do that, and see you until next time. Bye.